What's up guys, Tim Dux here. So today we're going to cover two topics. First will be what's the most efficient way to get into day tradings, and second we're going to go over the weekly recap. We do have a lot of takers recently, so I'm going to go over them one by one, and it's going to be very interesting because the market's been very stable compared to the last month. First of all, what's the most efficient way to get into day trading? So first of all, we divide them into three sectors. First will be pattern analysis, second will be volume analysis, third will be indicator analysis. Now, all those theories are kind of related because they kind of include each other. So I'm going to list, how they are different. Pattern is combined by criteria. There's criteria 1, criteria 2, and criteria 3. For example, so if you are doing oversitting gap down or potential first right day short, and you are looking for market cap between, let's say, 10 to 100 million, volume is around 20 million to 40 million. The flow is between about 3 to 5 million. So you are looking for all these specific criteria for specific patterns. Once it fits the criteria, then you're looking at your statistic sheets. You should know what's the winning percentage of this pattern. Now, second, what I'll talk about will be volume analysis. This one is kind of everywhere, and I'm going to give examples later on, but it includes gaining liquidities and losing liquidities. For example, let's say we are trading on the first green day and we have a morning spike. Now, morning spike typically counts as a gain liquidity. So if the stock continues to spike and starts consolidation and there's no resistance whatsoever, people are very interested into this stock, because if the stock is already over 100%, and people will think, oh, it maybe go 200%, 300%. So in between that time, it will attract more volume compared to normal. So once you're doing your volume prediction for the entire day, if the stock is doing morning spike, consolidations, you will trade more volumes than normal. Now, second, when you are looking at, let's say, morning panic, and the stock just dropped 50% in 2 seconds, and that will definitely, people will lose interest about this stock because we'll consistently lose volume throughout the entire day. Now, that's gain liquidity and losing liquidity. So the last thing that is kind of related will be volume ratio compared to individual resistance. I'm not going to dive too deep about that. It takes way too long to explain, but volume analysis is very important compared to the factors, and pattern definitely stay as a priority. So when you're looking at volume analysis and patterns always be volume analysis. And the last one I'll talk about will be factors. I think it's definitely the wrong way to approach into the stock market. When you are learning double top, double bottom, and these type of factors doesn't really produce good winning percentage. Let me give you an example. So if there's a massive support at 3, right? It's unbreakable support. We have suddenly a double top at 3.1. All of a sudden, when the stock dips to 3, it will definitely reverse. So there's no reward for you, maybe potentially 10 cents, but stock definitely have much bigger upside compared to the short side. So in this case, people who are more experienced with the stock market will take advantage of that. People that don't really know how support and resistance work, how volume analysis and pattern works, and that's how they take losses. So when you are looking at factors, they definitely help, but always pay attention to the previous two priority will be pattern and volume analysis. And that's my recommendations for you guys as a beginner. If you want to learn and approach into this market, always find 1 or 2 repeatable patterns. And how to really find patterns, I already did a video before. And that will be all suggestions for beginners trying to get into the market. And let's get into weekly caps. As I said, the market's getting stable now. So we have decent amount of takers and decent amount of patterns. And the pattern has gone back to normal, and it's fairly profitable. I have profited about close to maybe 30,000 to 40,000 this week. Let's get into these tickers and talk about how do I really spot the patterns and how do I really look at which ticker is tradable, which ticker is not. All right, let's get into this 2 weeks recap. We have 4 tickers that I selected. Maybe I'm missing something, but let's get into some of the tickers that I wanted to talk about. So WLL, this ticker as a priority when we're looking at a chart, we look at the histories. Overall, it traded about 10 million shares or more, average about 5 million shares per day, and it's a consistently downtrend chart. And when you're looking at a consistent downtrend chart with a major first green day, 60% of the time you'll always have a second green day. So when you're seeing a ticker performed the first green day, that traded more volume compared to in average, and there's about 60% of time the stock will gap up, and of course it gapped up, almost doubled, and traded a massive amount of volume, close to 300 million on that one day. Now, when you're seeing a massive amount of volume is, well, definitely not normal, because when we're looking at general market, the average volume trades about 20 million to 40 million in average. So 300 million is definitely overwhelming. And of course, the price is a little bit lower compared to what we trade in normal. The price range we trade is around $3 to $10 per share around first screen day. Now, if it's a multi-day runners, it will be completely different story. So WLL, it consolidated close to 3 hours, and at the market close in the next day, it gapped down. So it performed the overstaying gap down. It definitely traded much less volume compared to the 300 million day. So when you're looking at these 2 days, try to compare with each other, because the breakouts needs consistent liquidities and potentially more liquidity. And the reason why I talk about liquidity means the stock next day needs to gain more volume to break the previous day high. So when you're looking at WLL, 90 million definitely is not going to break 300 million. And in this case, the stock definitely favors short. Now, when it favors short, you have to look at the price range and the flow and the resistance. Now, as we see, the resistance is around 1.8. When we're trading on NASDAQ stocks or NYSE, NASDAQ does have a requirement that the stock cannot go below 1. And if it goes below 1, it doesn't really meet the NASDAQ requirements. So a lot of companies tend to hire market makers and potentially manipulate their stock go above 1, which is very normal in this type of situation. So for WLL, you can automatically assume the support is going to be at 1, and where you want to short at will be probably under 180 in this case. And we are shorting around, let's say 140, and your maximum reward will be 1. That's only about 40 cents reward. For me, it's definitely not worth it, because when you're trying to borrow shares to short this type of stock as very cheap stocks, so you need more shares, and that will give you more commissions as a cost, and also there will be more risk. Lower price stock typically have much bigger risk. The lower the prices, the more risk you are having. And it's not very good risk reward, and also I'm trying to short with a large amount of risk. That's why I didn't really short WLL. A lot of people are asking me about it, and potentially it can fade more and back to maybe 70 cents to 50 cents in the long run. But for me, definitely not my pattern, and it's a potential short. It's worth a try. But let's look at WRX. Now this one will be one of the special ticker that we have during the coronavirus hype. Stock went from almost from 2 to 15. Now 2 to 15 is generally kind of normal when we're in this type of market, but the volume is definitely not normal, because in that specific day we traded almost 100 million volume on that day. 100 million volume, as I said, it's around the maximum volume that we typically have for these type of low price stocks. So when you are trying to aim for either overstaying gap down or potential bounce short, you will be definitely good for long-term hold. As I said in my chat room, and WRX I will hold until it's around 4 or 2, and this one got halted, so probably when it reopens, it's going to open around maybe even under 2 or 1, because they tend to do a massive offering. And that's for WRX, and if you swing it, congrats. And swing positions typically involves about 2 to 3 month hold. And in this case, if you short it using overstaying gap down and adding the potential bounces, your average is supposed to be around maybe 9 to 10. And if you recover around $2, that will be over 80% profits of your original investment. So I would say WRX are one of the signature patterns for you to really learn from if you want to do part-time traders. So the next one I'll talk about will be CPAH. And this ticker does have some type of resistance. Now the resistance is not that clear, because when we're looking at fresh resistance or clean resistance, it needs to be volume only packed in one day, not slow grind or potential breakout through the resistance without any volume. So when we're looking at in the middle right here, these type of potential breakout and on the fake out kind of mess with the resistance a little bit because it traded pretty much no volume, and the stock can break this resistance in about 5 days. So when you're shorting CPAH, this one I didn't size it in the way I wanted because, as I said, the resistance are a little bit strange looking at overall chart. So this is the ticker that I shorted. My average is around 3.8, I think. I covered around 280-ish. So I covered half around 3, covered half around 270. Last chart I want to talk about will be CODX. Now CODX is a very normal chart that I talked about 1,000 times. These type of chart are favored into swing positions. That means when you're trying to treat as an intraday pattern, it doesn't really work that well because when a stock takes multiple days to go up, the speed of coming down equals the speed of going up. Now let me give you a decent example for multi-day runners compared to fast come downs and fast go up. So INO, as you see, the stock starts to speed up day by day and trading more volume compared to the previous day. The second round actually took much longer compared to the first time. First time went from $4 to $20 in about 1, 2, 3, 4, 5 days. The fifth day is actually dropping, so 1, 2, 3, 4 days. And INO starting from 8 to 15, so overall only 100%. It took 1, 2, 3, 4, 5, 6 days. When compared to the speed of going up, 4 to 20, that's about 500%. 8 to 15, that's only about 100%, and it took longer to get up there. So for INO to come down, it will take probably 4 days or 5 days to go back to maybe 10, since there's a large amount of support around 9. And that's why INO is not an ideal short. So hopefully that answered all of your questions on INO and CODX, because I do see a lot of questions that, well, the stock's going into potential resistance. What do I do about that? Is it an intraday pattern or a swing pattern? So as I said, it's a swing pattern. If you want to swing it, it will be worth your time. But personally, I like to catch intraday patterns. They do have better risk reward and higher winning percentages. So these type of swing patterns, they are slow. I don't like slow stocks. So that's just my personal opinion. And that will be the end of the video. Hopefully you guys liked it. Please smash the like button. And if you guys have any questions, please leave a comment below. I will answer it as soon as the video is posted. I will see you guys in the next one.